Consolidation AM rally PM decline. Institutional order flow is going to be neutral or it's going to be unclear to you. So if you're ever questioning what the institutional order flow is for a particular market day, and it's not obvious in terms of where we're at relative to premium or discount on daily or 4-hour, chances are we could probably see a scenario like this, especially if there's no real high impact or medium impact news expected during the 10 o'clock hour or later in the day in the afternoon. So if there's a vacuum of any real market drivers, you can expect a particular projected range to unfold. AM trend is going to be seen by returning to a discount array, then price rallies, or after the first hour or the opening range, or expands higher from equilibrium to run London buy stops, or it could be intraday highs for the buy stops. At the time of this recording, this is the actual projected range I used for the June 22nd, 2017 trading day for the SPOOS market, where I sold short at 24.37 and look for the price to trade down into a discount array or reach for sell stops below the marketplace. So this is the actual projected range I used for a live trade example. So you can see how I formulated the idea and used it in a real-time example today for your learning. The lunch hour consolidates with shallow retracements. PM trend runs the lunch hour highs, then reaches for the day's sell stops, intraday sell stops, or it runs the intraday high, then reaches for intraday or London sell stops. Now, obviously, what's the criteria? How do we know which one it's going to do? In other words, is it going to just run the lunch hour highs, or is it going to run the intraday high? That depends on which is a premium array. In other words, if there's a higher time frame premium array that AM session hit, then it's likely that it won't go back up there because they've already defended that level, and it may just want to run the lunchtime hour highs. Now, if the AM session has not traded up into a higher time frame premium array, like an hourly or a 4-hour chart premium array, then the afternoon could run the intraday high and then reverse. The PM trend can simply consolidate into the close after the lunch hour as well. So it can make all the movement in the morning and then just fizzle out and go sideways the rest of the day through lunch and into the close. Consolidation AM rally, PM decline. In the morning, we're going to be comparing the index SMT divergence at the lows comparably against the Dow and NASDAQ with the S&P mini. And we're going to be holding for minimum of 10:30 to 11 o'clock in the morning, New York time. At 11 o'clock, we would anticipate some measure of consolidation and or retracement down into the lunch hour. After 1 o'clock is seen in New York, we would anticipate some measure of a rally again, and we would be comparing SMT divergence at the highs comparably across the three averages. And we would be holding for, again, around 2 o'clock minimum, looking for a run into the short-term lows. The AM session high will be a 15 or 60-minute PD array or premium array. The afternoon will be a 15-minute or 60-minute PD array. Now the afternoon can run the lunch hour high for buy stops if the AM session high forms at a higher time frame 4-hour or daily premium array. If the AM session does not form the short-term high going into the lunch at a higher time frame 4-hour or daily premium array, we would anticipate the rally after the New York lunch to run the intraday high up into a 4-hour or daily PD array or premium array, and then decline after that. So it's a very simple measure of what's causing the high to form in the AM session. If it falls short of a premium array that's seen on a 4-hour daily, chances are it's probably going to rally again harder to reach for that level and then make a reversal. The afternoon low, again, reaching into the 2 o'clock hour, as many times it's going to be the 15-minute to 60-minute discount array. All right, so just as an example, just to show you what it looks like again, I'll give you an example of a consolidation AM rally, PM decline. That's what was seen today at the time of this recording. And I'm going to show you here as an example. Look at the most furthest down or chart on the bottom. Okay, it's the Dow, and we can see going into the AM session of June 2017 on the 23rd, Friday. We can see that the low failed to go lower into the AM session. For the NASDAQ, we can see very easily and obviously that the NASDAQ was able to go lower and the S&P was able to go lower. So the Dow was able to buck that trend, indicating there was strong buyers stepping in, and the S&P rallied as a result. Then we went into the lunch hour, and then immediately after the lunch hour at 12 to 1 o'clock in New York time, that begins our PM trend or afternoon session for the equities or indices. And again, at the bottom, we can see that the Dow, from the high formed in lunch, made a lower high, was unable to rally above it in the PM session, and went lower. In the NASDAQ, in the middle chart, we can see that the NASDAQ made a higher high than that which was seen in the lunch hour. And the S&P was unable to make a higher high that was seen in the lunch hour. And price trades down as a result and back into the equilibrium or middle of the range. Notice in the S&P that during the AM session, that rally traded all the way up into an old premium array. See that old high back here? So blending these ideas, you can see how using the 15 to 60 minute PD array as objectives and targets, and also to frame the context of what makes these intraday swings occur when looking at the S&P. So when we get into the August content, I give you the top-down analysis PDF. It gives you like a flowchart perspective. I'll walk you through the scenarios that leads to these specific projected ranges and how to trade them accordingly in a trading plan format. Until I talk to you again, next week we talk about the stock trading, doing short-term trading and swing trading with stocks on a month-by-month basis. And that will complete the delivery of June 2017's content. And then next month in July, we'll be looking at mega trades across all the asset classes as well. Until consolidation, AM decline, PM rally. This is just the opposite of what we just saw. Institutional order flow again will be neutral or uncertain to you. The AM trend will see price return to a premium array, then decline, or after the first hour of trading or the opening range, price will expand lower from equilibrium to run London sell stops. The lunch hour is going to see consolidation with shallow retracements. The PM trend will see price run the lunchtime lows, then reach for the day's buy stops, or runs the intraday low, then reaches for intraday or London buy stops. Now, again, as I mentioned in the previous slide, what scenario would you expect? Which one would you look for the PM trend? If the AM session low trades down to a higher time frame discount array, then the New York PM session will only look to run out the London lunch low. If the AM session low, in this case, does not trade down into a higher time frame discount array, then the New York PM session will look to run out the intraday low and then rally. PM trend can simply consolidate into the close after the lunch hour as well, just like we said in the previous slide for consolidation, AM rally, PM decline. Now, when we're looking at this particular day right here, when the market's not predisposed to trade higher with a trend or lower with a trend, this is the classic scenario where you see that tug of war back and forth. This is what you'll see a lot of times in index trading. which makes it very frustrating if you don't understand the mechanics behind it. When there's a strong directional bias behind the marketplace, or the underlying pinnings of the market suggest higher prices or lower prices, do not look for this particular scenario. Okay, this is not seek and destroy, it's simply consolidation. Now, in non-farm payroll, there is seek and destroy conditions in S&P, but generally this type of day will fulfill if there is a lack of trend and lack of news. So as you can see, there's only 8 projected ranges that I use for the S&P, and it makes it very simple to anticipate what it is that I should be seeing on respective sessions, the AM session and the PM session. Now, obviously, the lunchtime hour is the same. It's the same thing across all of them. Consolidation with shallow retracements. The only time that the lunch hour is different is when we see the trending days, the 2-session up close or 2-session down close days, because lunch can actually be active during those days, but it's always going to be relative to what was seen as a catalyst that drove price higher or lower for those respective days. So hopefully this is giving you more insight as to how I interpret projected ranges and how we can look for objectives in price action using stops, because that's what we understand the indices look for. They seek stops, and they, on a higher time frame, can trend, but on an intraday basis, you have to understand it's all about liquidity and where the stops are. It's a trader's market, so therefore they're going to hunt stops predominantly. And until the next lesson, I wish you good luck and good trading. Consolidation AM decline, PM rally. Again, initially when the market makes an attempt to rally up into a premium array, we're going to be looking at the indices to diverge bearishly at the highs comparably. And we're going to be holding for, again, ideally around 10:30 to 11 o'clock in the morning New York time. Then anticipating after 11 o'clock some measure of consolidation to retracement higher going into the lunch hour. Then we will be comparing the SMT divergence that should form at the lows comparable across the NASDAQ, Dow, and E-mini futures, and looking for time of day to support the idea of an expansion on the upside. If it's consolidation, we don't expect it to go all the way into the close. In other words, it's going to be an early short-term high that forms that will be later on a decline seen going into the close. So we're not going to be holding for the rest of the day. We're going to be relying on time of day. So generally around 2 o'clock in the afternoon, it creates that comparable high in the PM session. The AM session low is many times a 15 or 60-minute discount PD array. And the afternoon, again, is also a 15 to 60-minute PD array or discount array. The afternoon low could run just the lunch low, or it can run the intraday low formed in the AM session. Again, as a reminder, how you determine which one it's going to be is if the AM session bounces into the lunch off of a higher time frame nested level that's also seen on a 15 or a 60-minute discount array, then we don't expect the intraday low to be taken out in the afternoon session. But if that AM session low is forming above a higher time frame discount array, then we would anticipate a lower run on the intraday low in the PM session, and then the rally or increase in price after that sell stop run has been seen. The afternoon high is going to be seen with a 15 or 60-minute PD array, and we would anticipate not further upside, but a retracement and gravitation back to the equilibrium price point of the day, basically back to the middle.